Hello, Warriors. How's everyone doing? Patrick, King, how are you? Ziggy, Windsor, 99, hello. Everyone doing okay? Want to congratulate Blake Morrow on its gold call. Stelios on its long silver. Hello, Morrow, David, how's it going? Tim, nice to meet you. So here's Aussie Kiwi, right, from Friday and Monday. And this is why you take partial profits. Nice to meet you too, King. Everyone get it? So if you took partial profits up here yesterday between 80 and 105, and you still believed in the trade, you'd be recommitting with profits rather than principal on that partial position that you took. That's called trading. So I believe the RBA meets tonight, so it could be high risk, but so far we are putting in a higher low. And even if we wash out on the central bank decision, there'll be glaring divergence at new lows. Everyone with me? Give me a Y if you're with me on Aussie Kiwi. All right, great. I want to focus on Euro right here because I do have something I want to share with you from Grega. So here we are. To me, it looks like a megaphone formation developing here. And we have two drives. We have one, we have two. My best guess is sometime later in the week, Thursday, Friday. In fact, for you Astro guys, you guys probably remember I used to interview Norm Linsky. He's one of the better astronomical traders out there. And he got a hold of me a few weeks ago, wanted to come on Thursday. So Thursday is a very important day with Norm's work. So if you put it together, if we start getting new highs into late this week up around 1320 and the RSI does not confirm, I think you could have something here. Give me a Y if you get that. Potential top for at least a correction of this huge advance that we've had in Euro. Everyone with me on Euro? So this is what I want to share. It's a new feature. Greg has supplied a beautiful video. I'm going to share it with you whether you're a subscriber or not, because that's what communities do, right? Communities commune with each other, they share, they build each other up. Here's Greg's video. Enjoy it. And he also talks about the bonds in here, so here you go. Just a quick 6-minute update on Euro by Greg Horvat, the Wizard of Waves.
Hey, Dale.
Yeah.
Good morning, my friend. You cannot share system sound like that.
What's that?
You cannot share system sound like that. There is no sound coming through.
Oh, okay. Well, then everyone's going to have to subscribe to see it. All right.
No, the specific one, you know, as a sample, we've already uploaded to our ForexAnalytix YouTube channel. So
okay.
That's the incorrect answer, Steve. No, the correct answer is no, you guys all need to subscribe to ForexAnalytix.
They do.
What planet did you grow up on? Jesus.
Yes, exactly. This planet.
Yes. On the
Jesus planet, Blake.
On the non-marketing planet, for crying out loud. All right.
Yeah, anyway, what can you do? You know what? I'd rather work with someone that has a giving spirit like Steve than have 4 other people like me. Although I too have a giving spirit, but it's a great video, so you guys check it out on YouTube. Right, Blake?
Check it out on YouTube if you go to YouTube.
Whatever.
Great call on the yen yesterday and the gold, Mr. Morrow, LeBron.
Thank you. I was actually grocery shopping, shorting the dollar yen. Unfortunately I got out early because I spent my whole hour grocery shopping,
Yeah.
short the yen, and I closed it unfortunately as I was leaving the parking lot because I didn't want to. I actually was stuck in the parking lot trying to close out my position, but yeah, it's
Good thing. Thank God for mobile apps, huh?
thank God for mobile. That's right.
You could also check out our mobile app on our YouTube page, because you know, just like Blake, you know, people probably think you have butlers, you know, like Mr. French,
Yeah, right.
doing your grocery shopping for you, that even Blake has to run mundane errands like going to the store to feed his family.
I actually enjoy, one of the things is I actually enjoy going to the grocery store, and I know it sounds silly, but I do, because it's mundane, brainless activity. You know, I'm still looking at numbers, but I'm pricing everything out. I'm keeping an eye on inflation. It really is kind of, it's soothing to me to go grocery shopping, believe it or not. I you know, you may laugh at it, but and no, although I do you know, have somebody that comes clean my house every 2 weeks, and that's it. Well, I have to. I've got 3 dogs and
oh my God.
So, yeah,
it's right. Yeah.
No, it's you know, I've got to have somebody come by and clean the house, because it's just, you know, that's like money well spent. But going grocery shopping or doing anything like that, no, those are things that I like. Washing the car is fun to me.
Yeah.
Like, I don't have to think about it. It's very brainless. I'm away from the computer, and I can just, you know, I enjoy doing stuff. But no,
it's like a meditation for you.
But I'll tell you, if things move in Asia, it always happens when I'm at the grocery store. It does. It's kind of like when I take a vacation, the market moves a lot. Well, when I go to the grocery store, it's like right in the beginning of Asian trade, and half the time, that's why I actually prefer to get the grocery carts. Now, if you're in Europe, you may not know what I'm talking about, but we have grocery carts, and they have little cups in them, holders.
Oh yeah.
And in the cup holder, I keep my trading app going, and so while I'm grocery shopping, I can see all the markets. So that's how I do things. I know it sounds silly, but
I mean, that is a serious breakdown I'm showing in U.S. dollar yen. It took out your line, and perhaps it's pretty oversold here, but I think you got to sell rallies. We're probably going to the line that we discussed yesterday, Blake, down towards the 105 level that you had a return line at. So I definitely think we're going to take out this low anyway and clean out the bulls here. So,
yeah, you know, we have this, so the flag, it's not really a flag. I was looking at, it was supposed to be a flag, it just not.
Yeah, you had kind of a flat line here at the 110.40 level that it took out while you were getting cereal.
Right. Well, I sold it at 110.03 last night, and then I closed it at 109.77. So I didn't stick around for the whole party. I just kind of, like I said, it was within an hour and a half.
What was the catalyst news-wise? Was there anything? It's more bearish if there was no news.
No, it was real. Well, there's some comments that came out from the White House about looking to push tax reform and healthcare through like this summer, and I didn't. That's all I saw. You know, it's like I saw those headlines actually as I was driving, because I know, and you know, believe it or not, the reason why I knew the dollar yen was breaking through 110 is because I got an alert from ForexAnalytix that the support and resistance level broke.
Those are great. Those alerts that you're seeing right now that the Mexican peso was taken out. You know, I also noticed this, Blake. We filled a gap here in the end.
Yeah, so there's that gap that's from the French elections, I believe, and so we're at pretty tricky levels. Like I want to go out and sell yen right now, but I don't know. I don't know if I want to go out and do it, and the reason why is because, well, first of all, because we are filling the gap, and we are in North American trade, and
it's not your style to chase things. I know that.
No, it's not.
And you know what, Blake? I was thinking the news may have been, there was kind of a change that Comey was only going to be able to talk about his meeting with Trump. And then I noticed yesterday, late afternoon, that they were going to be able to ask him anything, including, anything about Russia. So the nature of the testimony changed from it being very narrowly focused to just his conversations with President Trump to other matters. That may have thrown a little fear into the market.
Yeah, that could have been it.
Okay.
I don't know.
It doesn't matter why. It just matters that you were there.
Well, and the other thing is I think the market's really thin around that time. It's very thinly traded. So there's, obviously, you start plowing stops, below 110.20, and 110.20 was really the support. I can pull over the charts and I'll show it to you. And because
the bonds. So this may also set up maybe the end of the last push up in bonds with the yen going down towards 105. Maybe we challenge at 2% yield on 10 year with this going there.
Steve says I'm a little laggy on voice, so if I sound a little laggy, you have to excuse me. I got a lot of stuff running on my internet, so right at this moment in time. But this move right here below the 110.20, this is where it started tripping some stops through here. So you can see that once it went through there, it was just a matter of time before it started breaking down. I like, you got that gap fill that you talked about. It's right here. The thing that will really trigger me, the thing that really is really going to trigger me to get a little bit more aggressive, and maybe I will start chasing a little bit more, is gold. I mean, I hope you guys are seeing it. I mean, I sold it yesterday at 1280. Last night I rebought it at 1285.4. My cost average 12. My cost average right now is a little higher because I added to it again this morning, but it's like 1285 and change. I have to actually it's 1286.78. So we're approaching this resistance here, and this is really big. I mean, if gold breaks out, it's a big breakout. But you also pointed out bonds. I mean, look at bonds. Bonds are breaking higher. We're nearing this 38% retracement, which is a big deal in the bond market. But if bonds really start ripping and gold starts ripping, I don't think the yen has any other choice than to move lower. I really don't. The dollar yen, meaning the yen will continue to gain strength. So I've got that on right now. I did, by the way, just so you guys know, I took my euro pound off the table, and the reason why is because I'm going to trade Thursday. I think I positioned a lot with the euro pound is not necessarily just euro pound, because I am long some gold here. And if
the elections,
the elections are, let's say, pro Corbyn's camp, the Labor camp, and I mean the euro pound's going to rip, and I think if it breaks above 88 pence, you just got to play it to the long side for a while. So I think I'll have some time to react on Thursday. As far as looking to play it, the euro pound to the upside. I'm a little nervous just ahead of these elections, but if the
who knows, you might get another chance at 86.20 or something like that too. 86 and a half.
Right, and if we have like Theresa May's the way I'm hoping is going to happen, Theresa May's party's they're gonna win, and euro pound might pull back a little bit, and then I can get long down there, because I do want to play it again to the long side. I don't care whether we're up here above 88 pence or we're down here at 86 something. I am playing it to the long side. It just doesn't. It's where I'm going to do it from. Is in question, and I don't. To stay on the safe side is the way that I'm going to approach this. But if the Labor Party does, you know, narrow the lead or narrow the elections to a point where people get a little worried about the UK government, then I think gold's just going to rip higher. Gold's
I'd like to acknowledge Stephen Curry-Volke, who shorted NASDAQ after the NFP on Friday, and I don't think it made that much more upside progress. Steve's probably still short. He's going to have a good day today. Am I correct, Mr. Volke?
Yes, I am still short. And
nice work. So that was pretty close to the top, at least for now.
25 actually, above the 127.2% extension, because we tagged perfectly the ascending channel. I have an ascending channel, and I'm also seeing here, I also, you know, shared this chart with Greg, and we discussed about it. I also see from the election low in November, we have a clean 5-wave up, with the third wave being extended, being 5 waves itself.
Nice work.
Well, hey, freebie Steve, do you want to go ahead and show people what you're talking about?
Yeah, sure.
All right.
Okay, that's going to chase me for a long time, right?
It is. Freebie Steve. Everybody.
Anyway, Blake, I know I didn't have to worry about it, but I'm glad the yen trade paid for your groceries.
Thank you. It did. It had to. In all actuality, I paid for my groceries for probably a couple of years. Thank you. Yeah.
By the way, Blake,
right,
as it seems, the bear flags did play out in the DXY and the USD yen. You remember that we were discussing the next.
Can you speak up just a little bit, Steve? I could tell you're in a trade when you speak softly.
Yes.
Go ahead.
Okay. Sorry, it's
I'll turn my volume up a little bit.
Okay. Probably the microphone is going to set itself up at some point as well, because it's automatic. Okay. So this is exactly what I'm seeing here. You can see the 5-wave up from the election low. So it's 1, 2. We have a 3 here. So actually here is the 5th of 3. So there is a number missing, but we can make that happen now.
So would the target, I'm a very amateurish Elliott guy. The target with 5 completing would be to 4 of a lesser degree, so that 4 comes in right there?
That is absolutely correct,
Okay.
Dave. That is absolutely correct. So I mean, if this works out, you remember we had drawn this line since we were here, because these 3 days of consolidation down here were looking to me more like a bull flag. And although it was already quite overstretched, with this kind of market environment that we have at the moment, I mean, nothing is impossible. And as it seems, we indeed pushed. I had drawn that perhaps we would test the channel. To be honest, I was skeptical that we would move without a correction to test the channel, but we did. So now we have tested the channel. We seem to be stalling. Although I have to tell you that I still see no movement down. I mean, if we keep consolidating for another 2-3 days, I'm not going to hide to you that I'm going to start thinking again that this is another short-term bull flag, and we might break higher. Of course, why not? But I would just like to point out something, and I've noticed Blake does it, Nick does it, Greg does it. I'm learning to do it. Is that you were short from that previous 5, had that big down day, and gave up all those profits, got out. Now, this is what lesser experienced traders will do, that after something like that, they'll say something like this to themselves. And the reason I know it is I've heard myself say to myself, oh, the hell with it. I'm not going to, I'm tired of trying to look for a top in the NASDAQ. And, I'm just not going to trade it for a while. I'm going to let it break the trend before I do it. Anyway, they take the market personally, and they don't stick with it and look for the next opportunity. Pros do that. Once people have that's normally with losses. You were break even. So pros know how to stick with something, and if it doesn't work the first time, they don't delete it
from their action plan, and they're ready to take the next signal. So,
and by the way, I've heard you say many times, you cannot go broke taking profits, and this adage has a lot of truth in it, but not without clarifying what we mean about that. It means that taking profits sometimes to protect a good trade so it doesn't completely turn against you is obviously the right tactic to follow. Sometimes it might limit your potential profit, but other times it will give you the opportunity to book a trade that you timed well, but you were expecting an impulsive move and you ended up just getting a corrective move.
like so far, like Aussie Kiwi could be. You know, we had that 100 pip pop off that reversal day, no follow through. But
exactly.
If you partial profits, you have 80 pips in the bank, and you have no stress on the trade now.
Yes, but on the other hand, people need to realize the following. For example, I could have easily said that that was an amazing day. I was short almost at the highs, and I could have easily booked, you know, a fast profit down there and tell to myself, oh my God, you know, you made within a few hours, you know, a decent amount of money, fine. But the question is the following. Was that the trade I was looking for? Was the trade I was looking for a 1-2% move? No, it wasn't. So if that was not the move I was looking for, and if I'm looking for a bigger move, it also means that sometimes, in this case that was not the case because the stop loss was very tight, but sometimes it means that your stop loss is actually more wide than the target, your implied target if you booked profit so early. So if you end up being happy for getting some fast profits and booking profits that on average are smaller than what you risk losing, it means that you might do the opposite of a good risk reward. You might actually end up, let's say, being right 6 out of 10 times and still not be making money. So that's something, you know, you always want to take into account. Always.
Yeah, that's why I think partials are a great compromise.
Yes, but you know, it depends on what kind of a trade you're looking as well. I mean, for me, those trades, short Nasdaq, for example, are complementary trades. I left one at break even. I left a previous one with like a minor loss, like 0.something% loss. I have no problem doing it another 2-3 times as well, because I know that when I get it, with one trade, I'm going to make, you know, the last 5 losing trades and, you know, double that.
Right.
And,
right.
you know, that's not the trading I do to actually make my account profitable. They are, you know, simply trades on the side. By the way, Blaker, you didn't talk about gold much. I know that he said it's breaking out, etc. Yeah. I know that he also said yesterday that this is the key level to watch, which is the previous high, and I totally agree. Because a friend was asking me, so I'm showing this very fast. In my opinion, this is the zone to watch. A break above there and it's gone. But I wouldn't exclude something like that. You know?
Yeah.
Something like that as well. Not impossible, etc., etc., etc. So you know, we're monitoring. On the other hand, silver, which we didn't talk about. Let's have a look at it. Silver. Weaker, yes.
But hey, Steve, about silver, one of the guys that I chat with all the time, he had mentioned that silver is lagging gold, and it is because we're seeing some risk aversion. I mean, when you have a little risk aversion, gold tends to outpace silver. So that's
you're absolutely right. You're absolutely right.
I wasn't sure if you're going to mention that or not, so I just had to throw that in there.
That's interesting right there, though, Blake. 61.8 back. That guy has a good eye. That's interesting.
Yeah.
And not only that, if you see, I have a channel resistance here. Let's draw it so it can be more obvious. I currently monitor at the channel resistance, which is around here. We agree, I guess, right? Look, we have some previous lows down there.
Right.
So I already booked, you remember, Dale, that I already booked half profits when we saw that doji here, because, you know, I saw that it was tired, we had a 2-day correction right exactly to retest the channel. We propelled higher from here. Personally, although I was long since almost the bottom, I had two entries, if you remember. I'm not very convinced that this move has a lot more to run before a deeper correction. So I have to be honest, and I think I'll book the other 50% if we make it up to here, which is around 1780. So the other 50% of my position I'm going to book here, and that's going to be almost $1.50 of profit for the other half of the position. I think it's a good trade, and I think I will re-examine what happens if I see something like this. This is a zone I'm looking at, and of course it also depends on how the price action is going to evolve. So I'm going to be monitoring 1720 if we get a rejection from up there.
You wouldn't have a ratio, you wouldn't have a gold silver ratio chart, would you?
Sure.
Just out of curiosity.
Of course. I actually usually do the silver.
Do you pay attention to it? Okay.
Yes, I do. I do.
Okay.
And if you remember, I had shown this chart when we were down here. One of the reasons I had given for me to want to look into actually buying silver was, besides the fact that silver was battered, we had that record, like, what was it, 15 days lower in a row or whatever. It was also the reason that I thought that the silver to gold ratio, I know that most people watch the gold to silver ratio, but it's the inverse of that. So, it's one and the same, was also extremely oversold, extremely. And we actually made that discussion when we saw that spinning top there. Then we got another spinning top. Then we got a down day. Then we got a hammer, and boom, that was it. We then retested it and then higher. This looks a little bit tired as well, if you see now. You see it?
Yeah.
It's starting getting choppy as well. But
so with it heading down, it's gold outperforming silver, or the other way around? With it going down?
Usually when silver is outperforming.
Okay, this is going down.
When silver is outperforming, this is going up, the silver to gold ratio. But I wanted to say in general that usually when silver is outperforming, usually is a good indication for the metals.
Right.
I mean, usually when silver is overperforming, metals in general are doing better.
Yes.
Okay.
Yeah, it also shows part of it's like global growth too, because it's more of an industrial.
Yes, one of the reasons is also what Blake mentioned. It has to do with how they perform, when we have risk aversion, etc. So that plays a role there as well. Now, I know that a lot of people have been asking about what the hell is happening with the Aussie USD and the Kiwi. We expected that rebound there. That was a nice rejection, but obviously, I wrote that also, I think it was yesterday in the analysis. Yes, yesterday. As it seems, this is a very big reversal that we got the day before yesterday, Friday, and we got some really nice follow through. So obviously, this stopped being a convincing rejection for a continuation lower. So at the very least, I wrote that yesterday, which was earlier, it would be wise to expect a second leg higher, which will obviously mean that we're going to penetrate the 75.10. So, for example, even an ABC, should take us, around 75.50. But we had mentioned that since the previous week, actually since the week before the previous week, since two weeks ago. I don't like the Kiwi and the Aussie anymore so much because they've been this was an excellent false break lower. Somebody could have taken that long, but on the other hand, for various reasons, I don't want to be long. Draw a trend line
off the September high and the February high.
Yeah. I know exactly what you're saying. You're seeing this one, right?
Yeah.
Or this one, if you ignore that one.
Yeah, it's still got room, you know, if you go up.
It does.
Yeah.
It does. It depends
I
on
like
which.
your pivot area right there.
Yeah, there is a nice confluence here. Yes. So
Yeah.
it can get rejected, and I also see, you know, the only sure thing is that I see a 5-wave up here. We don't even need to go to a lower degree chart. Look at this. 1, 2, 3, 4, perhaps a 5th evolving right now. But it's also probably an extended, like 1, 2, 3, 4, 5, 4, 5. So you know, Greg is gonna, you know, can give his input on that, but I'm pretty sure that this is a 5-wave higher. So at the very least, I would expect that any sell-off when we find some resistance is going to probably produce at least one more leg higher. But in general, look at this. It's choppy. Very choppy. Look at this. I mean, yes, you could have been swinging, you know, taking shorts at the highs, going long, etc., etc., etc. But I see better setups out there. And for sure, if you like Kiwi now, that's not the place to be long anymore. Not at least until we see a pullback to, I would say, interesting levels for a pullback. If you're looking to be long, is this level, for example. You can see we had the bottom here, we had the top here, we had the closing top here. Yeah, Blaker. Yes,
hey, I just wanted to point out that that we have a pretty big breakdown in the U.S. dollar Mexican peso. We're approaching election night lows. So just, you know, when Donald Trump was elected. So just I wanted to point that out because you know, you were talking about Aussie and Kiwi strength, and it's kind of perplexing to me too. It's like, wow, you know, I can't believe they're as strong as they are. You know, I don't know if it's on the heels of gold, the rally that we're seeing in precious metals. I'm not really too sure, but the peso, you know, is lumped into that category.
To be honest, Blake, here at this wedge break higher, I was a believer of a bigger rebound. But what helped me not get in the wrong way, because I'm not going to say that I shorted it, I did not. Although it had everything you wanted to take a short, was Elliott waves, because not only the rejection from the channel as well, at least the way I had drawn this channel, I got really troubled when I saw this rejection from here, and I got even more troubled when I saw the double top here. So you're probably reading my analysis because I know we're doing them in exchange. It was somewhere here when I saw
it's free. It's free for me.
True, because I'm Freebie Steve, yes.
Freebie Steve.
So somewhere here, I actually turned bearish the pair, saying that, listen, the way it has been behaving and seeing the channel rejection and the double top, I believe that another low is in the cards. And to be honest, I'm more or less of the opinion that the next low we're going to see, I mean, we already see a new low, but wherever this new leg lower stops, I believe that that's going to be a place to expect a larger correction higher. Perhaps, you know,
I'd like to pose a question to both of you guys. The peso is another example of markets retracing everything that they gained after the election. Gold's another one. Euro's knocking on the door. Yen's on its way. What does that make you think about, Blake?
Well, to me, it's to me, aside from stocks, because stocks haven't done that. It's telling me the market's not completely. I don't know if it's completely convinced of the new administration's ability to do what they say that they're going to do. I can't put my finger on it if it's a loss of confidence or whatnot, but I'll tell you, and this is something that really is, I think about quite a bit, and I'm not short the dollar Mexican peso. I'm not short the dollar Canadian, which I think I want to be, which I'm just not yet. But the thing is if we, you know, if the Trump administration starts to get into some hot water, whether it's because of you know, Russia or obstruction of justice, whatever, you know, over, you know, this Comey deal, I have to buy those. I have to buy the peso. I have to buy the Canadian currency. I have to, short the stock market. These are things that it's like the market's telling me right now that that's kind of the direction we're going. But then again, I look at, U.S. equities and I'm like, but the equity markets don't believe it, but maybe because there's so many passive funds.
Blake, something, the first thing that came to my mind when Dale asked the question was the following. Everything, what you mentioned now, everything has been retracing except stocks. Stocks keep conveniently changing correlations to whatever they're correlated, as long as that guarantees that they stay afloat. In my opinion, and you know me very well, I'm not a conspiracy theorist or whatever, this is another proof that this bid in the stock market is completely artificial. Completely artificial in the sense that it's not you and I and the average investor activity. This is the artificial bid that is under the market constantly.
I go along those same lines, and I personally, and I know this is, some of you guys are going to just laugh your head off, but I really do believe in the plunge protection team. I'm a big.
I do as well.
I'm a big believer. I don't think it's a big conspiracy. I think it's the way that the markets can finagle, or the government can finagle prices. Not really that. I think it's really to make sure confidence stays in the market, to avoid correcting us correcting too hard. There's going to be, obviously flows get so big where that it overpowers what they're trying to do. But I think that they predominantly buy futures. I think that they predominantly buy volatility futures. Or sell volatility futures. I think that's something that they do to suppress anxiety in the markets, and I think it's an easy practice for the government.
Yeah, it's quite cheap for them as well, selling volatility. I mean,
it is selling volatility, buying calls on the S&P. Because listen, if you're looking at the broad markets, you're like, well, it costs too much money to run out and buy, 1 million shares of Microsoft, 1 million shares of Amazon, but it's very cheap to go out and buy S&P futures and big lumps of it too. And when the market sees, oh, look at the futures are going higher, then they're naturally going to just, they're going to buy, 100 shares of Amazon and 1,000 shares, so it's kind of the herd mentality. So going back to, conspiracy theorists, I am, if you call that a conspiracy, well then I guess it is, and you could pin me as that. But
you could call it central planning. Another C word, but it's...
Yeah, but the first thing you learn in economics, Dale, is that the more you mess with a system, with a financial system, with an economy or whatever, and yet the more you try to manipulate it, the bigger distortions you create. And when you actually stop succeeding in doing that, the reaction you see, it's like you build a dam to contain the water. It
increases the magnitude of it.
Exactly. You build a dam to contain the water, and at some point, for some reason, this dam breaks. The disaster that's going to happen is going to be multiple times what would have happened if you hadn't built a dam there. You know what I mean?
Yes. Yeah, it's like, trying to keep a beach ball underwater. The further you push it down, the higher it pops.
Exactly. So at some point...
So you're talking about eventually we'll get to some type of tipping point.
Yeah.
And the market will play catch up in a big way to every the other correlated markets that it's
I have zero doubt that's going to happen, but timing it is another story.
Right.
So is it going to happen? Give me a paper, I'm going to put my signature on it. Can I time that? No, I can't. It's obviously going to have to happen when we're going to get some kind of concurrent triggers that is going to run the market really scared, and things are going to start being very hard to manipulate after some point, and then what happens. For example, you're a central bank, you've bought, and at some point, if you start fearing, like the S&P, for example, why did the S&P remove the floor? because it knew that sooner or later, they already knew that, they could not go on sustaining it because the flows it needed and the amount, or the amounts of euro they needed to buy were unsustainable in the longer term. So they decided that it's better if we let the floor ourselves than if the market at some point breaks it for us. So the same thing is going to happen. I mean, central banks are buying stocks, etc., etc., etc. The S&P, for example, owns, billions and billions and billions of stocks. But at some point, if they also get scared that that's it, the market has cracked, what do you think they're going to do themselves as well? Because they are going to have to, to explain to somebody why they incurred so many losses. They're going to sell as well. And when that happens, it's going to be a tsunami.
Yeah, and again, and I want to make very clear here what the point that Steve was making is that there's no sense in timing it, and we don't know when it's going to happen. But I truly believe that that's, and that's why we get these, massive moves. That it's like.
Blake, you've mentioned many times in the past that you like to get, in the mentality of the trader that has the opposite position. Yeah. So in a normal functioning market, let's say it was an FX pair, okay? Tell me something. Would you ever see a sell-off like this and then normal traders stepping in and buying 13 consecutive days? I mean, no. Let's say that you were long here. Was there a chance that the vast majority of the market participants would decide after such a day, yeah, it's okay, it was a market crash, but it's okay, I'm going to buy more here? No way. The first rebound you would see a couple of days, you would find an opportunity to get rid of your positions. And that's why we would have another leg lower.
Well, I think it happens when, if you believe in the deep state, they want to get rid of Trump. I mean, the same thing happened to Hoover, who was a very famous businessman, and the Fed tightened into it and pulled the plug on him. So if there are powers that do not like to have an independent guy who's not part of the elite, and I'm sure they're trying to convert Trump, but if they can't, they could pull the plug on him and he could be the scapegoat for something like that. So, when we think about it, just like it's political to keep it going, because of the, reasons that Blake and mentioned, to keep confidence going. If they ever wanted to knock Trump out of the box, all they have to do is give everyone's 401ks a 30-40% haircut, and his base will disappear because anything else that he does, it doesn't. But it hurt people in their wallets, and he's history. That's just my opinion.
You're absolutely right, but on the other hand, I just have something to say. I know that we're not here to make political conversation, but having the luxury of being European, so I'm not biased, I'm not a Democrat, I'm not a Republican, I'm not even a voter there. I can safely ask the following question. You said having somebody independent. In my opinion, with the way the system in the vast majority of big countries works at the moment, and crony capitalism being in charge of of most governments, in my opinion, there is not a question of if Trump is independent. It's the question of who he depends on. Perhaps different authorities, people, or interests than Hillary would serve. I have no doubt on that. But independent, personally, allow me to have serious doubt about that. And I would tell you the same. It's not personalized on Trump. You know what I mean?
Yeah, you could say that about May. You could say that about any political leader.
Especially in the U.S. because the lobbying power is, is at its zenith there. I mean, it's much more. I mean, lobbies in the U.S. the way the system has been built are more powerful than in the vast majority of the countries.
Okay.
So yes, I have serious doubts about that. But you're absolutely right. The way you mentioned is definitely a way the economy. Wasn't it Clinton that had said it's the economy stupid?
Yes, it was.
When they asked, well, yeah, okay, yeah. So it's that thing. So if when we get a recession and when we get asset prices tumbling, and since, as you very well mentioned, 401ks are connected to that, etc. What's going to happen? We'll obviously create a huge, serious issue with Trump's popularity, which anyhow is not doing anything great.
Yeah.
He's not doing great at the moment. By the way, another thing I'm watching was this triangle here in Euro Yen, and as it seems we're poking below it at the moment. So what we wrote yesterday in analysis that actually a close below this potential triangle, which is this top and this, probably opens the way for a retest of
21.5 or so.
21.5, 21.60, whatever. So
there you go, Mark.
Yeah, definitely today's move is quite bearish, especially if we close near the lows for Europe.
Maybe the second part of it happens after the Euro top. So, I'm laying for that. I encourage people to look at Grega's free video. Kind of lines up with some of the things I said. It lines up with some of the things that Nick said as far as upside targets. It lines up with some of the things that Blake said on his week ahead video. So, I don't trade every day. So when I'm looking for a setup, I have to be patient and wait for it. So, talked about seeing something Friday in Aussie Kiwi. I don't know about you guys. I think Blake probably every day sees something to do. I'm happy if I find a few things to do every week. It's just, maybe it's my age. But I don't trade every day.
And I agree 100%, by the way.
So there are some times where we could talk about surrounding events that make you think about what your biases would be, but I think we've mentioned plenty of trading ideas. I mean, the big breakdown in yen, you got to sell rallies if they occur. We have some nice targets down there. So much great analysis on ForexAnalytix that, if you really like to trade a lot, the alerts and the 4 different disciplines and methods that are on ForexAnalytix are going to give you many, many, many trades. I run it every day. So if you're an active trader, this website's made for you because you can customize the alerts to what you're focused on. But if you're wide open to trade whatever's happening, let me ask you this, Steve. How many push alerts do we average every day?
Updates
every day.
Do, I don't know.
Average. 30?
No, more than that. More than 50 for sure, actually.
Okay, there's plenty of ideas.
More than 50 updates for sure. There are 2 things I want to mention. First of all, I see our friend Ron here asking about the pound, so we're going to go there. But before that, I want to answer a question from Bill Henderson, because I also like macroeconomic questions, etc. And Stelios, I think Stelios is also present, so he might want to answer to that. He's saying, it just might mean that the economy is getting so efficient there will be no more big downturns. Technology still grows. I'm just reading his question. Give me a second. Okay. Technology still grows at great pace. More consumers around the world are added each month, quarter, year. It just might be going up, and the plans protection team is safeguarding unnecessary speculation. That's what Bill says as a possible hypothesis. This more or less Bill describes what we've heard many times, which is like the new standard, something. As far as we go back and we had kept good track of an economy.
It's different this time, Steve.
Exactly. This is the thesis that we see near the end of bull markets, which is what? It is different this time because, and I'm not saying that what you mentioned there is not correct, and actually, I totally agree with what you say, and that's why, on average, if we get the average of the cycles, of the business cycles, the economy, the global economy keeps growing because of all the reasons you mentioned. But due to human psychology and distortions in the markets, we always see, instead of having a slow paced growth, because of the reasons you mentioned, we have big swings higher, overshooting, and then the exact opposite move going below where we're supposed to be, and then doing the same over and over and over again. As long as the human brain is the same and the human psychology is the same, I expect that the same cycle, which transforms to what we see, what we call a business cycle, will keep repeating over and over and over and over again.
Yeah, and if I may add, he's right. You know, who is it that made that question? Who said that?
Bill.
Bill, yeah. I mean, he's right in many things, but we have to remember technology grows, and it has grown for the last 100 years. You know, it's never stopping, and there's always the next thing and the next thing, and there's always, like Steve said, there's always a overreach, and then there's a correction, then another overreach, and there's a correction. It's human nature, and it's the way it's always been. And technology will continue to grow and to, you know, bring new things. But
and population will also probably continue to grow.
More customers, more everything, more consumers. But I think this bubble, you know, this high-low cycle will continue to happen. I mean, that's human nature, my opinion. So I agree with you, Steve.
Okay, let's have a look at the pound. We had a look at it yesterday as well, and nothing has changed from then, which is the following. I had said yesterday, if I remember right, to Dale, that we did get a rebound from 128, which in my mind it's the bull bear line in the short term, but I don't like this rebound. I'm not convinced from this rebound, and that's why, I mean, instead of explaining, you can just see what I drew yesterday. I find it more likely that we're going to we're going to create a move like this than breaking to new highs. Of course, breaking to new highs is something that can happen since we held 128. But personally, I find it more likely that we'll have another leg lower before higher. And I think there is a lot of headwinds at the moment and uncertainty coming from the UK. Of course, the elections can create any kind of a move for us, and it's very likely that we might not do much until then. But purely from a technical perspective, instead of speculating for you know, political events, I wouldn't be long here. For sure, I wouldn't be long here. I mean, if I wanted to have a position here, it would be actually a short with a stop loss, I don't know, about above 130. I'm not saying you should do that. I'm saying that if I have to choose a side, I would say short-term short and then perhaps long again.
Yeah, I think Nick was looking for 29.60 when she was on yesterday. What was the high that we had last night? 29.40 or so.
Yes, you're right. And I actually also wrote in my analysis, because I had that zone. If you remember, I had this zone yesterday before even Nick came here, this exact zone, which extends from 129.60 to 129.95. So I think she said
990. Yeah, I think that was the equality.
Yeah, so I also wrote that as long as we stay below 129.60 to 130, as long as we respect this zone, I'm actually looking probably for another move lower. And you know, that remains to be the case. At least that's how I view this market at the moment. But needless to say, I would rather be long lower than short where we currently are, especially ahead of the elections.
All right, Steve, I need to take just a couple-minute break. Here's my prediction. I'm interviewing Brannigan Barrett, and I predict it's going to be a great interview. We're going to start it in about 5 minutes.
Perfect.
Brannigan is actually launching or just launched a new website. I think he's going to cover cable as well. So I'm just going to take a quick break so I don't have to keep crossing and uncrossing my legs during the interview. All right, buddy? I'll be right back.
Okay, so that probably means that until Dale is back, we can cover a couple of more pairs. Let me see what kind of questions we got from friends. What do I predict for Australia GDP release later today, especially with precious? You know, I'd rather not make any predictions. I'd rather see the reaction and react to that. From a technical perspective, I would like to see another move higher, and you know, if I see the right price action, I would rather then be short once again. But in general, as I said before, I see better opportunities. They're quite choppy. Another friend is asking about palladium. because we had been covering that. Palladium is continuing to be something wrong here, obviously. Let me see this ticker I wanted. Okay, there it is. Palladium has been a beast. Took profits on half. I called it live on the webinar here, then got stopped on break even. As it seems, we're getting an overthrow of this wedge. So now, as it seems, we are targeting the channel top again. So nothing to do here. Obviously, we're soon going to get some good reversal because we've now had 2, 4, 6, 8, 10, 11 up days out of the last 12. This move is overblown for sure, but you know, there is absolutely no reason. I was looking to be short again, but I never got to get any kind of trigger to do that, simply because we had no pullback of any kind or no formation that could tell us, okay, this is another topping pattern. Like we got the rejection here, during this we got a bearish engulfing here. I mean, you're waiting to see a confluence of a technical level with some candlestick trigger. Here, the only thing we see is, you know, a major move higher. So it has already invalidated the wedge thesis, and you know, I'm looking to see what it's going to do up back in the channel. So that's it. There's nothing to do with Palladium at the moment. Soon it's going to produce a short opportunity, I have no doubt. Let's see what else. USD CAD. Yes, USD CAD.
And Neil, I would focus on RSI, and yes, Ash, we did cover silver. We're approaching at 61.8 that Steve showed.
Whoever is coming late, by the way, and they've missed some part, you can always find in a few hours, as always, the recordings are going to be uploaded on YouTube. So
it's a great teaching tool for people to go back and refresh going over the session, especially for newer traders, because they're going to learn about different types of formations and methods and things that we look for that compel us to assume risk. Go ahead.
Exactly. So last pair before Dale starts his interview, USD CAD. Okay, rejection, move lower. This looks to me a very bearish bear flag pennant, call it whatever you want. I mean, it depends on how you draw the lower line, if you draw it parallelly or whatever. And actually, if you draw it like a flag, you get the channel support coinciding more or less with the bear flag support. So things in my mind are very simple here. A break below opens the door for at least a retest of 132.70 that I have this zone here. Only another move above 135.50 invalidates this view. And yet, even if that happens, I will want to see what the reaction from 136 is going to be. So if you're asking what my bias currently is, I tend to believe that it's going to move lower, either from exactly here or a little bit higher, for at least one more leg lower. So that's it.
Thank you, Steve.
Thank you, Dale.
Okay, Brannigan, I'm making you the presenter right now. Looking forward to hearing your voice, seeing your screen. Webcam optional, buddy.
Hi, Dale, can you hear me there?
I can, Brannigan. So nice to meet you and hear your voice. Thank you so much for coming to address our community today.
Thank you very much for the opportunity, and hopefully I can sort of share one or two things with your community, and if there are any questions, obviously just stop me as I go. So I'm just going to go straight into that. I heard what you guys said about the pound. I tend to agree, the selection, what it's done is that there is a bit of hedging going into the market at the moment. You can see it particularly in the option space. The hedging seems to be going through actually the pound against the yen, not so much the pound against the dollar. What is interesting, I think, you know, if someone did point a gun at my head and said pick a direction, I wouldn't want to pick a direction. I think trade location-wise, we're in a very interesting spot, and I'm going to kind of go through this from a little bit of a backwards approach, a little bit of a top-down approach, and then hopefully you can get a, you know, sort of an overview of how I would approach the market. So,
before you start, Brannigan,
yeah.
and you know, it's an interview, not a monologue.
Oh, okay, cool. Sorry.
All right,
yeah.
you know, it's interesting to our community to know where people like you that are professional traders that teach people how you got started. What was the influence that got you involved in the business, mentor? How did it happen to you? Who would you give credit to for getting involved in the business? Why don't you tell us a little bit about your story in the early stage?
Yeah, cool. So very simply, obviously, I started as a broker, wanted to get into, you know, sort of outright discretionary trading, flew over to London, started at a prop firm, yeah, who gave me, you know, they backed me financially back in the day when, you know, prop firms were quite eager to sort of financially back traders. You know, and then obviously sort of slowly but surely developed my skills and was fortunate enough to be in a firm surrounded by extremely, you know, sort of experienced traders, guys that have been around, you know, in hiking cycles, guys that have been around in, you know, the financial crisis, the 08, Lehman collapse. So I got to see a sort of a bunch of traders with loads of different skills. Now, you know, back in the day, obviously the markets moved very differently.
You were fortunate to break in that way, in my opinion.
Exactly, very fortunate because, you know, when the markets trade in a certain manner, you tend to develop skills based on the conditioning of the market. Now, you know, if you look at the markets that we've had for, let's say, the last couple of months, there's a real lack of volatility and breakout opportunity. So, you know, if you're just starting to trade now, you almost assume that the market's always going sideways and there's very little trend. Now, if you go back to 2011, 2012, 2013, if you're a trend trader and you were skilled in trend trading, you did particularly well. You try and apply that same sort of skill set now, and it's just a completely different game. So I was very fortunate to be around, you know, traders with different types of experience, and obviously that sort of catapulted my learning experience. In terms of the mentoring thing, that kind of started out just as a, you know, can you go talk to the younger guys and motivate them? And, you know, over time I kind of got a little kick out of it. I enjoyed it. But most important, it did help me reinforce my own understanding. You know, I can't stand there in front of a group of guys and say, you know, why are you fading this trend the whole way up and then not go and actually do it myself. So that's kind of where the whole mentoring thing sort of started out. And yeah, as you said earlier on, you know, we've launched Axia Futures, which it's been a fantastic journey. And yeah, hopefully we can keep evolving, you know, the education community and delivering some pretty awesome stuff.
Okay, so yeah, it's fortunate because I'm sure you come across a lot of people that buy the hype on the internet about unrealistic expectations. And, you know, I was talking to Jack Schwager yesterday, and, you know, he's interviewed the best traders in the world and market wizards. And, you know, if you're doing 25% a year on your money, you're doing well. Most money managers would do cartwheels. So it was fortunate that you know, came in and were surrounded by veterans, and now you're an old guy. So why don't you tell me what you're seeing here in the Dixie, making new lows here? That's the chart you have up. Is that where you want to start?
Okay, well, I'm not old. I've only been
now you're a battle-scarred veteran, Brannigan, okay?
I haven't even seen a hiking cycle yet. So, yeah, I think, you know, like you said, you know, in this day and age, you really have to develop your skills. You know, if you're going to pick, you know, a good mentor, you know, and I think that's where your show is wonderful. You know, you're bringing on guys that have been there, done that, they've got that real experience, and I think that's powerful. You know, you want to listen to mentors that have got the experiences that you can, you know, learn from. So as for the chart in front, yeah, that's dollar index, a fascinating chart, a chart you've got to be switched on to. Doesn't matter what currency pair you're trading, you've always got to know what the dollar index is doing. You know, simply it is the reserve currency. Now, what's interesting about this is obviously, you know, we are down on the year 7%. You know, not many people or not many newspapers are highlighting that, but we're down 7% in the dollar this year. Yes, a lot of that has to it's got to do with the euro. The index is heavily weighted toward the euro. But what is a fascinating level and something, you know, not just our prop firm is paying close attention to, but what everyone should be paying attention to is the Trump low that we made back in November last year. That, I mean, it's not even 1% away. You know, we get close to that, and there is definitely still dollar bulls in the market. market. There's a lot of longer term participants that are still, long the theme of divergence of America against the rest of the world, and that divergence just isn't happening. We're seeing not necessarily an aggressive slowdown in the US, but we're actually starting to see the rest of the world grow a little bit. So, what is also fascinating is that, we're expecting there's a 90% chance of a rate hike next week from the Fed. So, we've got this rate hike coming into play, and yet the dollar is still getting slammed. So right now, it's looking like there's a really big dollar plunge coming here. Call it another 2, 3, 4% move. So for me, it's just about picking, the currency against the dollar that's going to give you the best bang for the buck. And there's a number of candidates. You got to look at the euro, you got to look at the sterling. There's the yen even. There's a couple of really big numbers that you can make your month, make your year on, but you've got to be prepared for it, and you've also got to know how you're going to execute and take advantage.
So when you take a trade, do you know where you're going to, yesterday Jack said, before you get in, know where you're going to get out. So when you put together a trade plan, is it based upon some type of technical contingency that's going to give you a stop if that contingency is negated?
I think you've sort of stumbled on something extremely important here. Every single trader, I think one of the biggest mistakes a lot of new traders make is that they're always searching for a stop. They always want to understand where a stop goes, and they'll say, well, where's your stop and where's your stop? Now, one thing I was taught from very young age, and I think most of our traders apply this methodology, is we stop out where the reason for entry has become invalid. Very simply put, let's say you're taking a breakout trade. We all know breakout. Let's say we take out that dollar index low and we're expecting a major move in the dollar. Now, by its very nature, when we take out a key area and we are seeing a breakout, you should see one of two things. You should see volume and you should see volatility in the direction of the break. Now, the first thing to say to yourself is, if the context for you entering is that there's going to be volatility, volume, and trend, then by that very nature, the minute you no longer see that, the minute that becomes invalidated, that is when you exit the trade. That is when the stop comes into play. So 100%, before you clicking that mouse, you've got to know where the trade is invalid, and that's where the stop goes. The minute you have it, I don't even want to say a trade idea, the minute you have a stop for a trade, you've got a very, very strong trade opportunity, because as long as you're managing risk, it's a flip of a coin. You can flip a coin and guess which way the market goes. So long as you're managing risk, you're going to make money in the long run.
Okay, so Brannigan, you're talking about many markets have retraced most of the moves that happened after the election in the U.S.
Yes.
Except for, something that's in a parallel universe, stock indices. Yes. Are you a believer that there's manipulation or plunge protection team or some type of central planning that's holding up the stock market since gold has taken out the election low, the yen is approaching it, the dollar's approaching it, yet the S&Ps are near all-time highs? How do you explain that to your mentees?
What I would say is, again, the plunge protection team did give me a little giggle when I read that article. I'm not a conspiracy theorist, but what I would say, I think to understand, the E-mini S&P, I think there's two things you got to understand. And the first is the fundamental backdrop. A lot of people don't understand that, since, let's say, for instance, the Fed started tapering back in 2013, what we've seen in terms of monetary conditions, or in terms of rate conditions, is that they actually have become even more accommodative. You go look at a 10-year yield and look where we're trading today. We're trading at the lowest yields, even lower than when we started tapering back in 2013. So first and foremost, I think you've got to understand the backdrop, which is we're in a low yield environment where there's very little opportunity to make yield. Okay, except for in the equity market. So the case is, it's there's so little yield going around that you've got to start taking more and more risk to get some form of yield. And I think that's why what we're seeing is this trend being chased higher. I don't necessarily agree with it. I don't necessarily always understand it, but I can accept that so long as that we're in a low yield environment, and so long as pretty much the Fed is taking a gradual path and not really overly concerned, I think we're going to continue to see this trend. Maybe not trend, but I don't think we're going to see prices go down until something gives way. That's the first thing. The second thing, I think, what we have to understand is that you know, when we look at the markets as traders, we're always looking at it from the mindset of a speculative trader. Okay, we never acknowledge the fact that we are small players. You know, speculative players are tiny in the big picture. You know, the big picture is what are the fund managers doing? What, you know, what are the portfolio managers doing? What are the guys doing that have to trade?
You pay attention to COT numbers to get that info?
I don't personally, because I think it's information that's best left for longer term time frame players. But for me, I know every month there's pension money coming in. You know, you look at the population of the world, majority of people have got pension money, and that money has to be allocated. It has to be committed some way. So at the moment, you know, it's a case of, do you want to invest in negative bonds, negative yield? Do you go back to your pensioners every month and say, well, heck, guys, sorry, you know, you lost again this month because bonds are yielding negative? Or do you start to put a little bit of money to work? I think that's the second factor. I think one of the, you know, the facts, you know, if we're going to be objective, is if you go look at the birth of ETFs, I mean, it was just, what, 3-4 weeks ago now that the SEC's approved, is it a 3 times leverage or a 4 times leverage ETF? You know, and the reason they're doing that is because obviously there's a massive demand for this product of ETFs. And, you know, make no mistake, you know, you know, this demand for ETFs is contributing to the drive up ultimately in equity prices. So it's just simply a case of, you know, it's becoming a self-fulfilling prophecy that prices are going to keep going higher until something gives. Now, you know, a lot of people say, what might that be? It might be something silly. You know, I don't think it's going to be something traditional. I don't think it's going to be necessarily a yen rally or maybe a dollar collapse, or I think it might just be one summery afternoon. We're all sitting there, and the next thing the E-minis drop 2% and another 2% the next day, and then 4%, and then it speeds up. I think that's what people must remember, is that a lot of people have been trying to short this ugly rally for a long, long, long time, and everyone's given up. No one wants to be short anymore. That's why if you go look at the break from last week, look at the volumes. There is no volume on the break. You know, markets are overextending now, almost going a little bit parabolic, and that's a result of no one's short, no one's providing short liquidity, and ultimately now, you know, people still want to drive prices higher. So
could that black swan be cryptocurrency?
Again, I don't know that there's enough. In other words, if the cryptocurrency started to collapse, I mean, Bitcoin's back at what, 2,800 today. I think it's too early.
Maybe,
you know,
just to move into it, not necessarily a collapse of prices, but just the fact that it's an alternative to the fiat currency system.
Potentially. I mean, I don't want to. I'm too ignorant to Bitcoin to have any real strong enough understanding.
All right, so let's get short term together. I'm interested in your Dixie chart here. I know you have a line in the sand at the election low. With the way we're sitting right here, my view is that to me it looks like we have our second drive. I don't know what your green line is at the bottom of your chart. What is that?
That's a correlation. So if you know, something
correlation, S&Ps?
Yeah, it's a correlation to the S&P. Yes.
So it's all
the reason. The reason being, if I can quickly show you something which was really cool, and you know, this is something that not a lot of people have picked up on, but if you go back and have a look at you know, every major drop in the dollar. Now, I know a lot of the time, you know, I get very frustrated with the likes of CNBC and all these guys, because they always come out and they make an excuse, you know, strong dollar is good for the equities, weak dollar is good for earnings. They always make some sort of an excuses to sort of justify the rally. But what I picked up on was a particularly strong correlation. Whenever we've seen aggressive sell-side action, you know, in the dollar index, we're actually seeing either a holding pattern or a sell-off in the E-mini S&Ps, except for this time. This is the first time. If we look at this purple, that's the E-minis. This is the first time in the last 4 incidences over the last 2 years that when we've had, you know, a sell-off in the dollar, the S&P's actually gone the other way, which, you know, those divergences, when there's strong correlation, I always pay particularly close attention to, because that's telling me something's out of whack. That's telling me that if, you know, this E-mini did start to offer and we got back below that break point, you know, that we made last week around that 24.14 area in the futures, that for me would be a game on. That's when I'd get very aggressive, because divergences correct very quickly. They don't correct slowly, they correct extremely quickly, and that's what I'd want to be.
Or the dollar could bounce back to back test your breakdown line.
Well, yeah, or the dollar, exactly. Or the dollar goes back bid and the world is saved, and then we have another excuse to buy equities again.
Okay, interesting. What else is on your radar screen that you want to share with us today?
I think the pound is one you definitely got to be paying attention to, simply because of the election coming up.
Right.
I think if you get a longer term chart, there's one or two, a lot of traders, I know a lot of people look at various tools, but for me, as sometimes when I want to trade a little bit longer term, I just want to get two very simple tools up, and one is a Fibonacci, and I'm going to tell you why. I really like a Fibonacci just for simply, putting things into perspective. I call it a perspective tool. Okay, so I can see since the election, or since Brexit, vote till the low we made, we've roughly bounced, 38, call it 40% retracement. Now,
right.
For me, that puts things into perspective. Right now, fundamentally, we're still exiting Europe. It's still going to take a long time. There's still talk of a very hard Brexit. So all things being equal, it's very unlikely that this market should have a deep retracement, okay? Because fundamentally, nothing has shifted. So I would be very, very surprised if we ever got close to that 61.8. I would be extremely shocked. So for me, when I'm putting things, I want to know relatively where has a market pulled back to. Then the second thing I love to look at is sort of what we call accumulation distribution zones, and that's this little pink box here. All that's showing to me is it's showing, on a weekly chart, we could see the market sat for almost a good 2.5, 3 months before we got an extension in this range.
Some people call that a supply zone.
A supply zone, exact same thing. So
right.
For me, as a profile trader, obviously I'm a day trader, so I utilize, volume and market profile quite extensively in my analysis. And, what it says is that within this range that we sat in for 2.5 months, there is a fair value. There was a price established between buyers and sellers where they agreed this was the fairest price at this given point in time, given the fundamentals. Now, when we move away from that and we come back and retest it for the first time, you tend to get very strong response off of that area. And surprise, surprise, that sort of VPOC or volume point of control or the highest traded volume within this range comes in somewhere around that 130, 190 in the spot market. So it's fascinating that it coincides with a 50% retracement. It coincides with this line I just happened to draw. It coincides with a lot of other variables, and that for me, when you get what we call the stars lining up, that's when I want to be, that's when I'm very excited. That's when I just can't wait to be involved and get in and take the trade with the right trade location. So, for me, it's a very simple trade. You shouldn't be really getting much above that 134.5 area. Ultimately, again, in terms of timing, obviously I'm a day trader, so I will spend a lot of time getting, my entry right and getting the right kind of leverage on that trade. But it's the kind of trade I'm very excited about because it lines up and there's a lot of confluence.
So you think there's a possibility for that 124 region to retest that breakout line?
Sorry, 134.
124 on the downside. You think we're going up? Oh, okay.
Yeah. Okay. Again, I think
maybe I misunderstood you. Because I thought you were talking about us being in a supply zone so that you might be negative.
No, so yes, agree with you. We've entered that supply zone, but there's a point or a pivot within that supply zone where buyers are no longer interested in being long because they're getting long in a very risky area, and you're going to start to see sellers step it up because they feel now, markets at a premium, and this risk reward wise makes sense for them to start accumulating a position again.
I see. So you'd be long from here?
It depends, and I think it's all got to do with the election. I think your presenter earlier said it very nicely. At the end of the day, it all has to do with the election result. I think this is going to be one of the easier outcomes as well because it's quite binary. The expectation is a conservative majority win. I think if you get that conservative majority win, just with how weak the dollar is and the structure of this cable market at the moment, I can't see cable not taking out that 130.50 area. It was, if you go watch how that market made that top, it was very poorly done. The auctioning process up there was just very bad. It wasn't like sellers stepped in and said, thank you very much, I'm going all in here, I'm going short, this is the trade of a lifetime. We spent a lot of time up there. The market didn't really navigate quickly away from that 30.5 area. So
yeah, it didn't put in any kind of a reversal candle. It just stopped going up and then started selling off.
100%. No aggressiveness. And another thing that just to share with your viewers, and this is kind of, I know we're running in here, but something I'm really excited about is, you know, we look at this quite a lot. This is a rebasing chart. So all this is showing is, you know, a lot of people have been, you know, on Twitter and all that saying, why is the pound not going down? You know, it's so strong, and, you know, but they're actually very mistaken. Now, if you look at this, this is effectively, you know, the G7 currencies against the dollar. And I've put it on a date when Theresa May effectively announced that she was going to have an election. Now, if you follow every one of these currencies, obviously bearing in mind the bottom two are both inverse, so they actually should be positive. The weakest performing currency against the dollar since Theresa May announced, you know, that there was going to be election is the pound. Okay, it's fractionally up. It's 0.3 of a 6% up. You know, you look at the euro's up, you know, 5.25%. You know, yes. The Swiss franc's up 3.5%. You know, the yen is up 1.85. You've got the Aussie up. You know, even the Australian dollar's up 1.6. You know, so every currency is outperforming the dollar bar one, and that is the pound. Why? Because we have a political risk right now. Now, for me, once that political risk clears, you know, I cannot see in a weak dollar environment, I cannot see the sterling not at least attempting and taking out that 30.5 area, running into, you know, that supply zone or that area where sellers say, okay, hang on a sec, guys, this is a big spot, we're getting involved, wherever it may be, 32.5, 33, 34s, who knows? But you know, for me right now, this rebasing chart with an election, conservative win, I can see that pound doing a little bit of catch-up over the next couple of days.
That's a great view, Brannigan. That's a great view of this chart that you have here. Very nice. Thanks. So I want to reward you for a great presentation, and if you'd like, you just launched Axia Futures. Perhaps you'd like to show your website so that people know how to contact you, get a hold of you, should they have an interest.
Awesome, I appreciate that. Thank you very much. Yeah, so that is the website. It's a really cool website, very simple. You know, we have some educational courses. You know, we have obviously, you've got quite a few products, but our really key product that we're super excited about is that, you know, there's nothing like it in the market. It is a live trading floor. So, you know, you can log onto the website, and what we're doing is, for instance, last week over the NFP, you know, live from our London floor, you know, you could watch, you know, professional traders executing. You can see the traders' positions. You can see the traders' emotions. We have a heart rate monitor, so you can see how a trader reacts, you know, when he's entering in, you know, pretty big positions, how his heart rate responds. It's an incredibly interactive, you know, tool that the purpose is not necessarily that you copy traders, okay? The purpose is that you ask yourself, okay, bang, something's come out. Why is the entire floor gone long, you know, euro dollar? Well, what is it that they're trading? You know, is there structure there? Is there something fundamentally? So, you know, we've got some really super exciting products.
What a great environment. You know, I miss it. You know, I miss the floor, and I miss, you know, the big office with a bunch of contemporaries in the office to do it. I love my commute, you know, one room to another, and which bathrobe should I wear? But what a great environment for people to learn. I want to thank you so much for taking the time today, Brannigan, and wish you and your associates and your mentees all the success in the world with your new venture. And what a cool environment for someone to go to London and hang out on the trading floor like that.
And thank you very much, and appreciate the opportunity, and yeah, hopefully you can keep up the good work. You know, it's impressive what you're doing, you know, offering yourself to the market. So thank you very much for the opportunity.
You're very welcome. Good hunting, my trading warrior brother, Brannigan Barrett. And you could also follow Brannigan. What's your Twitter handle again? Yeah,
Trader_Bran.
Okay, Bran. All right, thank you so much, Brannigan. Pleasure meeting.
Thank you very much.
All right, buddy. Good luck on the pound after the election.
I appreciate it. Thank you very much.
All right, buddy. Good hunting. Okay, everybody. All right, Andrew. Okay, Face, have a great afternoon. See everyone tomorrow. You're very welcome, Heidi. I want to thank Blake. Great grocery shopping trip he did yesterday, and thanks Steve Volge and Stelios, and I want to thank Grega for his video on the euro, which has given me some ideas, and I'll see everyone tomorrow. I want to thank Nick for giving me great ideas every day. Consider becoming a subscriber, and I'll see everyone mañana. You're very welcome, Mike. See you, Kevin.